Yeah, welcome everybody uh, to our webinar on global finance and fascism yesterday and today. My name is Andreas Novi. I work at Vienna University of Economics and Business, and I'm president of the International Karl Polanyi Society. And this webinar is organized together with from the International Karl Polanyi Society with two institutes at Vienna University of Economics and Business, the Institute of Law and Governance, and the Institute of Spatial and Social Ecological Transformations. And we are happy to have Bruno De Conti and Pettifor with us, two well-known researchers, and we will discuss and Jana, a very important topic that can you shift to the next slide, Jana? That is a little bit neglected when talking about the great topics of today, and that's democracy under pressure, and that will be a conference that we will these organizations will organize next year in Vienna in May. On this topic of the rise of the far right, populism, new authoritarian and even fascist movements, and how this relates to the economy. And in this, in preparation of this conference, we had already one webinar that was on the law of capitalism and how to transform it with Katharina Pistor and Anne Sanders and Verena Madner. And you can already access this webinar and listen to it if you did not participate in 2 weeks ago. And the same will happen with this webinar. It's recorded, and you can, if you enjoyed it and did not capture everything, will have the chance to listen to it again. Yeah, so that's the framework for this event. And it is an event that's linked to two other activities of the Polanyi Society. First, our blog on fascism and liberalism yesterday and today, and hopefully out of this conversation today, there will also emerge blog contributions by our esteemed colleagues. And for keeping in touch with all these activities, we invite you to subscribe to our newsletter. And that's all for the setting. And now to our two speakers and discussants. And I start with Anne Pettifor. And you see here her last book, The Global Casino. Anne has written, she's a political economist, has written a lot of books. We discussed in preparation in 2021, was a keynote speaker here at WU, but is a requested speaker for all these years, and one of the outstanding critics of global financial markets. And that's why she is, we are very happy to have you here. And thank you very much. And when we talk about global financial markets, especially in the context of yesterday and today, then one quickly remembers the Black Friday and the crash of Wall Street in 1929, and the depression and fascism in Europe, and the New Deal in the US. But it's one world we are living in, and these developments had strong repercussions in the global south as well. And that's often forgotten. And I think in the current situation we are living, one can no longer dismiss these implications of what happens in the global north and its linkages to the global south. That's why we are very happy to have Bruno De Conti with us, an economist from Unicampi, Universidade Campinas, which is one of the best universities in economics in Brazil. And Bruno has been working on issues of global finance and development for long, and recently has written with colleagues a very important and interesting article on what he calls the International Division of Finance. It's a little bit the extension of the discussions on the International Division of Labor, which you probably know. That means the global north produces manufacturing goods, and the global south raw materials, and they exchange it. That leads to an unequal relationship. But the unequal relationship also reproduces itself in finance, and that's what he's working on, and that's why I think he's the brilliant complement to N. We have now one 1.5 hours for our webinar and the discussions, and the idea is that we start with an analysis by N on the global financial crisis of the 1920s, 30s, and its implications, with the idea that then we hand over to Bruno to complement this from the perspective of the global south. And in the second part of the webinar, we proceed to the learnings, the similarities and differences to current development, looking at the United Kingdom and Brazil today. And we plan to start have a more or less 3/4 of an hour of a discussion of Anne and Bruno. And then we will open to questions that you can submit in the Q&A session, and we will I will take them up and present to Anne and Bruno. And no more to say on the proceedings, and hopefully we are now filled with all people interested and in the waiting room. That Anne, the floor is yours.
Thank you so much, Andreas, and thank you also. It's an honor to be on a panel with Bruno, and a very wise framing of this crisis, both in terms of the parallels, but also the impact on the South. And of course, I've come to this whole debate from that perspective because I began with my work on the sovereign debts of the low-income countries back in the 1990s, and worked hard to be able to get something like $100 billion of that debt written off in nominal, $100 billion in nominal terms written off for about 30 countries. So, that perspective is incredibly important. It's what's led me to try and understand the whole system. So I want to begin by saying that the parallels between now and the 1920s and 30s are just really quite terrifying. And Polanyi was so right in his analysis of what caused the rise of fascism then, and we can see before our very eyes at the moment the very same causes being demonstrated right now. So the big similarity, and perhaps it's even more stark in our age than it was in the 20s and 30s, is that we now have governments of our economies by markets. Markets are in charge. Markets are running the show. Markets are the big shots. Markets in money, markets in banking, markets in goods and services. We're governed by markets. There are global markets in energy, global markets in food, markets which are beyond the reach of regulatory democracy, beyond the reach of governments. I'm very struck right now, for example, that the United States is awash with oil and gas, and yet the United States consumers are having to pay the same price as the rest of the world. They're more than $100 a barrel. And that's because the price for oil is not determined by the United States. It's not determined by the King of Saudi Arabia. It's not determined by President Putin. It's not fixed by the producers. It's fixed by a market at the Chicago Mercantile Exchange, which is a global market and which includes both real traders in what are called the wet barrels of oil and speculators, those who deal in paper barrels of oil. And they're fixing the prices. So while in the United States, the producers of oil can't believe their luck, they're so totally aligned with the president in this war because the prices of their commodities, oil and gas, is going through the roof, whereas the consumers, the people of the United States, are paying the price of that crisis. And even if Trump wanted to do something about that, the only thing he could do was to offer tax breaks or subsidies of some kind. It has no impact at all on the price of commodities. So we have global markets in essential commodities, and it's most frightening in terms of food, grains and so on. And the prices also are determined by the the Chicago Mercantile Exchange. But it's the market in money and the way in which the market in money dictates economic policies around the world, including interest rate policies, including exchange rate policies, that is most frightening. And as Keynes argued in the 1930s, markets cannot fix a crisis. Markets are not capable of dealing with a crisis. So in the 1930s, if you look at the parallels, if you read Charles Kindleberger on that period, it's quite extraordinary. First of all, the parallels with the boom in the United States, then it was a land boom in Florida, the Florida land boom, which moved, of course, into also the stock markets and the stock market boom. Today we have the AI boom. So there was that. There were the tariffs imposed, the Smoot-Hawley tariffs. There was the imbalances. Above all, there were the imbalances between surplus and deficit countries. And then perhaps most terrifyingly of all, there was the absence of world leadership. There was no hegemon actually that could play the role of lender of last resort. Britain had lost its power to do so. Sterling, the war had undermined the British economy and it no longer was able to play the role, if you like, of global lender of last resort. And the United States wasn't ready to do so. And we have a similar vacuum today where the United States, the President of the United States, is determined not to play a role in coordinating and cooperating with other world leaders to maintain stability in the global economy. He is not interested in that at all. He is only interested in alienating his allies, in attacking his allies, and attacking competitors, except for China, as we've seen in what I thought was a really humiliating meeting with President Xi this last weekend. So we have these huge parallels. We have the inflation, the period of inflation, and then the one thing that is not similar today is that we don't yet have we have deflationary forces, and that includes high real rates of interest. But the deflation set in really strongly in both the United States and Europe after the crash in 1929. That is not yet a feature of the Western economies, at least. Although I think because real interest rates are high in real terms, it's not impossible that we shouldn't soon with the exception of the war in Iran, which is maintaining very high prices, find ourselves in a deflationary situation.
But and perhaps can you for the audience summarize a little bit what meant deflation after 1929 and how Brüning and the German Democrats reacted so differently from the US New Deal solution? Because I think this
Yeah.
historical development is very important when we then talk about possible ways forward today.
So in 1929, there was this great financial crisis in the United States, and it impacted on Europe as well. And the response of governments, well, the response, first of all, is that when the economic system fails, when there's economic failure, and the private sector in particular is afraid to take risks, is unwilling to invest, there are two really big problems. And in the 1920s and 30s, the big problem was this, that, confidence had collapsed. And the governments were reluctant to step in and restore confidence. And Brüning in Germany was a classic example of the imposition of austerity in the face of the crisis. And the fear, what Charles Kindleberger calls the phantom fear of inflation, was just as inflation is waved at us today and we're warned about the horrors of inflation. That happened also with Brüning. So they reacted to a collapse, if you like, in economic activity by collapsing state activity, by austerity, by cutting back on spending. This happened in Germany, but it also happened in Britain, where after the 1926 general strike, of course, when the wages had been cut anyway, but when in the 1930s, under the regime of Prime Minister MacDonald, the proposal was to cut unemployment benefits. And that again triggered real depression in Britain. So you had austerity as the response to this crash, because in a sense governments were pretending then, as they do now, that actually they did not have the power of intervention. They believed that the markets would fix things somehow. And then can I just say that the overridingly common parallel was the independence of central banks. Central bankers just did not respond. First of all, central bankers acted to the deflation occurred because central bankers kept interest rates really high in real terms. And by doing that, they cut investment, and therefore they cut jobs and they cut employment, which cut income. And then cutting income led to the cut in purchases and consumption. And that was what caused a deflation in prices.
And who gains from such a policy?
The ones who gain from that, of course, are creditors, because in a deflationary environment, in real terms, the debt rises relative to prices and incomes. In an inflation environment, the debt rises in value relative to incomes and prices. But in an inflationary environment, the inflation erodes the value of debt. So a creditor who'd lent $100 in an inflationary environment only gets back, say, $95. But in a deflationary environment, he gets back $105 or even $110. And so creditors welcome a deflationary environment. And that's what we had. We had that, and we had governments pretending to be paralyzed. We see this today as well. We see politicians acting as if they're pretending powerlessness. I'm only a politician. I have no power. I can't do anything about this. And I'm sorry, the central bank can't help out. No, the central bank must be independent. And if central bankers decide, as they have in Britain, to keep real interest rates too high for a very weakened economy that's reluctant to invest and create economic activity which would create income and which would enable prices to rise, in those circumstances, we have the threat of deflation. So yes, so austerity was common to that period as it is now. But I think perhaps one of the most dangerous parallels is the so-called independence of central banks. And we're seeing that play out right now, where we have inflation, which is caused by the war in Iran. It's caused by the fact that oil and gas and fertilizers and aluminium are all piled up inside the Straits of Hormuz. And that is causing, the demand for those goods is still high, but the supply is falling, which causes the price to rise. Central banks believe they can tackle that inflation by increasing interest rates. And if we see volatility as we do now in bond markets, if we see the private markets reacting badly to those high rates, the way they're doing that is by increasing yields on government bonds. And we see that happening now. Heavily indebted governments are finding that the cost of borrowing rising across the spectrum of lending, across the spectrum of bonds that are available. So that comes from independent central banks who believe they actually have to have an impact on fiscal policy. They fear that governments will increase spending to compensate for the inflation. They fear that workers will demand more wages, higher wages, also in response. So they're acting to repress that before it even appears. They are acting to cut back on potential economic activity even before it begins to rise. So it's a really big problem for us today, as it was in the 1930s. So,
and perhaps can you, before I hand over to Bruno, and we have already, and that's very nice, this links to the current development, but you have to spend a few minutes on what was the different response by Roosevelt and the US in these years.
Yes. So the point is, what is extraordinary is that, and it's unique in history, is that as we move into the 1930s, the governments in Europe, in Britain and in the rest of Europe, are retrenching. They are contracting the economy. Roosevelt is elected in 1933, and this brings me to the most important parallel. I keep saying all of these parallels are important, but this one is really important. He becomes president in 1933, and he resolves on the day of his presidency that he is going to dissolve the gold standard, that he's going to take the United States out of the gold standard. And he does that, whereas all the countries of Europe and Britain are desperately trying to maintain the gold standard. Now, the gold standard was a deflationary system, basically, but I won't go into it in detail yet. But uniquely amongst Western leaders, Roosevelt resolves on the night of his election, of his inauguration, that he's going to take the United States off the gold standard. So he says to his advisors, we must do this tomorrow, straight away. And they say, you can't do it on a Sunday because that's a holy day. You have to wait till Monday. On a Monday, he closes all the banks and he demands that Wall Street hands over the gold to the Treasury, and that the United States will no longer fix its exchange rate relative to the gold supplies in its vaults. Instead, the exchange rate is going to be measured by the strength or weakness of the economy as a whole. And that's a really radical action, and it helps the United States to begin to emerge from the Great Depression, whereas in Europe, the reluctance to get off the gold standard. Britain is forced off the gold standard, by the way, in 1931, but the reluctance of Germany and the other countries to come off the gold standard is what deepens the crisis in Europe. So we have this phenomenal situation where we have effectively a Keynesian policy in the United States in the 1933, and a deeply Hayekian and Austrian, in some senses, policies imposed in Europe. Austrian in the sense of the Austrian school of economics. And that deepens the crisis and makes it much, much worse, and leads, and all of this, of course, all of this instability, all of this austerity, all of this.
You are muted.
Sorry, I'm not muting. Can you hear me?
No, muted.
I haven't muted it.
No, we can hear you, and probably it's the problem is Andreas.
Okay. Sorry. So what Roosevelt does is to adopt Keynesian policies for government intervention and expansion. Now, there isn't a parallel to that today. There isn't a Roosevelt today. There isn't a political leader today that is going to take that kind of action. But also, worse perhaps even, there isn't an economist like John Maynard Keynes making these arguments today. And so we find ourselves, in a sense, while there are many great parallels, there are also very great threats to us because we lack the kind of courageous political leadership that Roosevelt offered, but also the kind of advice that John Maynard Keynes offered to governments and how to deal with a crisis. I think I'll stop at that point.
Yeah, thank you very much, Anne. Because I hand over now to Bruno and kind of completing the picture. You have now the background set by Anne, and please go ahead.
Okay, so first of all, let me congratulate you for the organization of this seminar, and thank you very much for inviting me. It's an honor for me to be here with Anne and with you as well. But then, well, in the case of the global south, obviously, any crisis which outbreaks in the center of the system comes to the global south with a very powerful strength, right? So in 29, it generated here in Brazil a severe shortage of international currency, and then it led immediately to the abandonment of the gold standard as well. So in 1930 already, in Brazil, it was necessary to abandon the gold standard because of a lack of reserves, simply enough. But then, obviously, it allowed for more policy space here. It was a moment in the 1930 is a relevant year in Brazil, precisely because of this crisis, which at the same time reduced a bit the power of the agrarian elites because the price of coffee, for instance, declined a lot. And then it was the moment in which Getúlio Vargas came into office. And then this crisis situation, which is in principle a bad situation, obviously, but it increased policy space here. And then it allowed for the devaluation of the Brazilian currency and the adoption by Getúlio Vargas of an industrialization policy, right? So the idea of import substitution because of the lack of dollars, then the effort to produce domestically what was previously imported through the usual means, so custom tariffs, exchange controls, and then obviously stimulating also the domestic market. And then the second, relevant external shock, external from the point of view of Brazil, was the Second World War. And then it was again a moment of, more in developmentalist and industrial policies. In this moment, through the creation of basic industries, right, which strong state intervention again, to try to solve the bottlenecks that private initiatives could not meet. So lack of energy, steel, infrastructure. Then the government started creating strategic state-owned companies. An interesting thing as well is that in this moment, actually, Getúlio Vargas, I don't want to say only good things about him because, he was he established an authoritative government, and also he flirted a bit with the Nazi. But then at the end of the day, he decided to go, to align with the allies. Also because he used it, let's put it like that, he used these geopolitical tensions as an opportunity. And then he aligned it to the allies, negotiating a support in terms of financing for this heavy industrialization. So there was a kind of a bargain with the US. And then Brazil had an important loan from the Exim Bank in the US, which allowed for the construction of Companhia Siderúrgica Nacional, the steel national company, which precisely dealt with one of the biggest structural bottlenecks that we had in Brazil at that time. allowing for the internal production of steel, which was necessary for metallurgical, mechanical, civil construction, and so on and so forth. And then it was the creation of other state companies, even banks. It was the later on the moment of the creation of the Brazilian Development Bank. So just to put in a nutshell, it was a moment in which, it was possible to have more policy space and establish a kind of a developmentalist policy.
So do I get you correct that the key point is that all these positive development efforts, industrialization, social policies, they strongly depended on this policy space, which means disconnect from global financial markets?
Yes, exactly. I'm not saying that being isolated from the global financial markets is the solution, but then if you want to come, and we will come to the current situation, I think that at the end, the dependency which is created by, external finance, but also in this specific case, the constraints created by the gold standard, right, were important constraints for any effort of industrialization in Brazil. And then in this case, breaking with the gold standard was a good thing, is my point. And just to finish, I'm not saying that finally it didn't mean that we reached autonomy or anything like that, right? Just to follow on Vargas, if you want. In his second government, he tried even harder to push for autonomy and nationalism and so on and so forth. And then it created a lot of political tensions, which led him to suicide. And then later on, we have the story of a coup d'etat against João Goulart, which, was also a way of putting Brazil again under, let's say, this very straight dependency on the US and later also in the global financial. So I do not mean that it led to autonomy, but the crisis in the global north had initially deep socioeconomic impacts in the global south. Second, it opened a bit of policy space. But then third, it does not necessarily translate into long-lasting autonomy sovereignty.
And would you agree with Anne that in the 1930s, also in Brazil, there was strong leadership with Getúlio Vargas, something that you can't find today, or you don't consider this that relevant?
Yes, it's a good question. I would say that leadership is relevant, but then more important is being backed by social forces, right? Who back any kind of government. So coming to the current situation, I guess the very relevant thing is, which is hard to imagine in the current situation, but we have to be hopeful. The social movements and social forces backing a government like we have like now with Lula would allow Lula to have a left-wing government, which is not the thing he's doing now, right? He's in this very hard situation because he made this very big coalition, which was necessary to beat Bolsonaro. But then if there was social movements pushing him in the direction of progressist measures, it would be easier even for him. So it's leadership, but it's also social forces behind this leadership.
And can I also say that there's a risk, and there was the risk in the 1930s, of nationalism as an alternative to the gold standard. And really what is needed is policy autonomy at home, but also internationalism, international coordination, partly to strengthen home policies. And that would have been very difficult to build for Brazil in the 1930s. But I get the impression that Vargas didn't go out and look for it. Can I just say there was interesting parallels with what was happening in Japan, because Japan, under the famous economist Takahashi, advised the politician who's also called Takahashi on interventionist policies on creating spending, creating credit and investing in the economy. And the economy began to recover. And then the military demanded that he should spend even more on the military. And when he refused that, they assassinated him. So that, you know, these attempts at nationalist, if you like, nationalist solutions is not sufficient to shore up and strengthen political leadership. We need international coordination and cooperation. Now, we begin to see that today with the BRICS, but I don't think it's strong enough, really. And I don't think there's strong enough leadership in it. And as you say, Lula is constrained by his own coalition. But one of the key issues is this, that, you know, in the 30s, they operated under the gold standard. We are operating something under the dollar standard. And it's whether or not countries can get out of under the dollar standard. Now, I believe they can, and I believe the answer is what Keynes argued at Bretton Woods, which is that countries, like, for example, all the countries in Africa should be building clearing unions, which do not depend on a hegemonic currency. Latin America, the possibility of Latin American countries working together for a clearing union there seems to me unlikely, because there seems to be splits between those pro-American economies and the anti-American economies in Latin America. But in Africa, there is the possibility of cohesion, of international coordination, even if it's only at that continental level and if you like, regional level. But, you know, it requires leaders to begin to look at international coordination to solve problems, because they can't do it on their own.
Yeah. And Bruno, before the two of you push to the present, and I think the audience as well is interested in, but I will insist in one more historical question, because it opens the perception of alternatives. Yeah. And my question to you, Anne, you mentioned Bretton Woods, but you did not explain it. But I think to remember what type of policy space opening together with an international order Bretton Woods allowed. And then I would ask afterwards, Bruno, whether the new international economic order was something similar, broadening this to the global south as well. And then we come to the present.
Yes, so I mean, I'd like to, at this point, just quickly go back to 1919 and post-First World War, and Keynes is in Versailles. And Keynes proposes a new international financial order. He proposes that the Allied forces, the Allied states, should guarantee a loan to Germany to enable Germany to recover, to enable Europe to recover. And he makes this proposal at Versailles that, you know, Germany should issue a bond. It should be guaranteed by the United States, France, and Britain, and repayment over time with certain conditions, partly to deal with reparations and so on. But this would establish a new international financial order, which was, if you like, where public authority is exercised rather than private authority. And Keynes is defeated in this process, as Eric Rauchway explains in his wonderful book on the moneymakers. He's defeated by Wall Street, because the head of Wall Street is in Versailles with President Wilson. And he can see that if we have a system whereby loans are issued by states and guaranteed by states, then the repayment of the debt to those states is going to take priority over the repayment of private debts, i.e. loans to Wall Street. And Wall Street had financed the First World War, and they were not going to be, if you like, subordinated to the interests of of states in extracting Germany's assets as repayment for war debts. So he's defeated in that. But he goes back to the proposal in 1945 at Bretton Woods of reordering the international financial system in order to maintain stability. He's defeated in one key respect, in the sense that his clearing union is not agreed, and instead we get the dollar. And subsequently, because of that defeat of Keynes, both in 1919, I mean, in 1919, the defeat of Keynes leads to the rise of fascism and to another catastrophic world war. And I just want to stress how important that defeat was and how secretive it is. Very few people know about it. I was reading Adam Tooze's history of that period, and also other histories which accuse Keynes of behaving badly and throwing a tantrum at Versailles because he left very angry that world leaders had thrown aside his proposal. He did not know that it was Wall Street at that point. But in 1945, he comes back again, and this time he's defeated by the Americans, who insist on having the dollar. And so we come back. He knew that if you have a hegemonic currency as the world's reserve currency, you're going to get into a position where you have a dollar standard, and it'll be like the gold standard in a world of free market, capital mobility and deregulation and so on. But in 1945, he and Roosevelt insists at the Bretton Woods there should be no bankers present. They construct the Bretton Woods framework, which is a framework for international coordination and cooperation around exchange rates and a determination not to allow deficits and surpluses to emerge. Countries in surplus would be penalized, countries in deficits should be penalized. That was at the heart of the Bretton Woods system, to maintain balance between states and reduce political tensions between them. And that, of course, is smashed up in 1971 by President Nixon and the Americans. So, and then after that, we restored the gold standard, in effect, free capital mobility, deregulation, financial deregulation, government by markets. It evolves after 71. And we live there therefore by the dollar standard. And the dollar standard is crucifying economies in exactly the same way as the gold standard did in the past.
Just to add before I hand to you, Bruno, also for those not so familiar with these important monetary issues, for me it was really striking reading books that Anne is reading as well, the Rockway. If the gold standard would have reigned during the Second World War, the Allies would have most probably lost the war, because the logic of the gold standard would have been that when Britain has no longer any gold, the US would stop sending arms to London, and they had no longer gold in 1940. So only by introducing this idea of lending paper money could the financing of the war be organized. And this was the logic that was continued with Bretton Woods. But for me, it was very helpful to understand how stupid the idea of a gold standard is. And if it's really serious, like in a war, you have to abandon it if you want to win. But Bruno, can you add on this issue of international cooperation and how this links to policy space?
Yes, just a few words about your previous question on the new order which emerged from the Second World War to the global South. And then I would say that with the Bretton Woods system, that there was at least one very good thing for the periphery of the world, which was the possibility of imposing capital control, right? Because then that's the point. And I think this is one of the most serious things we have to discuss nowadays, and it was a bit abandoned, right? Is the idea that countries need to have capital control, not, again, to isolate themselves, but in order to filter the kind of capital which is useful for the development. This is what China is doing, for instance. And then back in 44, it was allowed. I mean, even the US, they accepted that, there would be this necessity of capital control in order to revamp trade, right, which was the purpose. But then there was a crucial flaw, and I could not agree more with Anne. The big flaw was that, they still kept a national currency as the key currency of the world. And then it cannot work, because then it creates the exorbitant privilege mentioned by Valéry Giscard d'Estaing to the US, which was even stronger after 71, because then at least well, they had this parity to dollar. Later on, they could just use it as they wish, the US. So having a national currency as the key currency of the world creates tensions imminently. So and then in the periphery, we suffer much more than in the center, and even in the center, central countries suffer from this dependency on the US dollar. But then obviously in the periphery, it's heightened. And this is what we try to discuss in the article you mentioned, but I
And
can come back.
perhaps you can, no, but perhaps I think that's exactly the
Okay.
moment that you really explain what it means, the international division of finance and how this impacts on the global south.
Okay, glad to do it. Actually, well, in the Bretton Woods period, or in this moment, right, in the 40s in Latin America, it was a very fruitful moment in Latin America in the creation of a very powerful theory, in my opinion, at least, with ICLAC, right, the Economic Commission for Latin America and the Caribbean, the structuralism Latin Americans, Raul Prebisch, Celso Furtado, who were discussing precisely the problems related to the international division of labor at that time. So the fact that in the periphery, we were producing only agricultural and mineral goods, and then the center producing industrial goods, and then, well, it created a relation of dependency and vulnerability, right? But at that time, they were not discussing, at least not to a big, in a deep degree, the problems related to finance, precisely because there were some controls which made financial problems less relevant than they are today for the global south. And then with some colleagues here at Unicamp in Campinas, we are trying to think in this framework of the structuralist Latin American structuralism, but updating it. And there are several works on the need to discuss the new international division of labor with the global value chains. This is another relevant thing. But what we are trying to do is claiming that analogous to an international division of labor, we have to discuss an international division of finance.
Yeah.
What does it mean? It means that there is a division between a core and a periphery in global finance, which is not accidental. And it's not a lack of development of the periphery. It's not a lack of maturity. No, it's by construction, the periphery, the role of the periphery in global finance is a role of providing high yields, right? So the assets which are provided by the periphery, they have less liquidity, lower liquidity, higher risks, and high yields. And this is the role of the peripheral assets to provide high yields, whereas the center provides assets with low yields and high liquidity, right? So those are the roles of the different parts of the dichotomy. And it's not accidental. It's not a lack of maturity. It's not a matter that in Brazil we have to develop our capital markets and so on and so forth. It is related, first of all, to the currencies, the hierarchy of currencies. We do not issue dollar. We do not issue euro. So we issue a peripheral currency. And then it constitutes a relationship between center and periphery, which similarly to the international division of labor is a relation of dependency and vulnerability, right? This is the point. And the same way we had with the international division of labor, a transfer, and we have of wealth from the periphery to the center. So Prebisch discussed, for instance, the tendency for deterioration of terms of trade, right? Declining prices for agriculture and increasing price for industry. So this was for the International Division of Labor. And we have a same trend with an extraction of wealth from the periphery to the center through financial means, meaning that at the end we have a double, this is how we name it, a double capture of wealth from the periphery to the center through the new International Division of Labor and through the International Division of Finance, which are correlated. We finish the article by saying, well, the peripherality is one. So we have analytically, we can distinguish it because there are feedback effects. but it's relevant for us to think on the two dimensions of peripherality, the technological productive and the monetary financial. That's it.
I think
I hope it was clear.
that's
Yeah.
profound, and he's is absolutely correct, really. So I want to congratulate Bruno on that paper. That it's really important insight into, and it's an important expression of these power imbalances between North and South, between the centre and the periphery. But those imbalances also come home to bite. I mean, when you think about, what happened in the 80s and 90s, this is where I was involved in the sovereign debt crises, was that you have sovereign debt crises at the periphery, but gradually they move towards the core, even though the rich countries couldn't believe that it was going to happen to them. It implodes back in 2007-9 because the system is just too unstable. But I also want to just reinforce what Bruno is saying about capital controls. And it's true that China has capital controls, and therefore China has greater policy autonomy. And what's fascinating to me is that Trump and his supporters, in particular the man called Stephen Moran, who he put on the Federal Reserve Board and who's one of his chief economic advisors, that together with parliamentarians in the legislature and a think tank are beginning to argue for controls over inward flows of capital into the United States. And their argument is those inflows are strengthening the dollar, which weakens the competitiveness of the United States. And so they are determined to do something about that. The problem is Wall Street. Wall Street benefits from those transactions. Wall Street, when China buys assets from the United States, when China sells assets to the United States, she earns dollars from that. And instead of taking those dollars home to invest in the domestic economy in the United States, China invests that in US treasuries, or has done, and so do other countries. And that does strengthen the dollar. So they're trying to stop that happening. But the transactions take place through Wall Street, and Wall Street is not going to be happy with that. But nevertheless, it's very interesting that when it comes to capital controls, which in economic debates is considered as beyond, worth discussions, if you want to talk about it, is regarded as outrageous, the United States is going to be the first country to introduce capital controls of the Western countries.
We have a question that perhaps from the audience that that permits Bruno to evolve towards the current situation in Brazil and perhaps other parts of the global south. Which strategies are pursued by the center and the semi-periphery to navigate an increasingly fragmented global order and how they are evolving? So Bruno, can you start?
Okay. Yes, maybe I will start also reacting to Anne's claim that, well, even the center suffers from this dollar hegemony, right? And then in this paper, we calculated the extraction of wealth, meaning the financial incomes flowing from the periphery to the global north. But then now we are doing a new paper in which we made a division within the center countries. So we put only the US and then the other central countries and then the periphery. And you are totally right. And when we calculate the incomes related to the external assets and liabilities, for the center countries, it's zero more or less, but with moments of negative and moments. Then for the US, it's extremely positive. So they receive a lot of money from the balance of the external assets and liabilities. And from the periphery, it's extremely negative and is structurally negative, you see. So it's indeed necessary to separate within the center, the US from the rest. And it's totally right. And then coming to the current situation, well, I would have a lot to say. Let me try to summarize. But I studied the international monetary and financial system since my PhD thesis, so since 2010, 11. And sometimes it's a bit boring because things are the same, you know. But now we are really living an earthquake in the international monetary and financial system. And there are many ways of seeing it. And one of the ways to see it is that Europe is reacting to the dollar hegemony very vocally, you know. So Christine Lagarde at the ECB, she's now talking about the global euro moment, that this is the moment for the euro to become stronger because of Trump and the dollar. She's even mentioning that, well, the internationalization of currencies can be related to military issues, which is something that, well, people who study international political economy, everybody knows it. But coming from the president of a central bank, the ECB, in a discourse, in a speech in Berlin last year, he mentioned that, well, the strengthening the euro is also related to security. So it's a way of, and there are claims for the digital euro, for instance, that there is the need to reduce dependency on Visa, MasterCard. So even in the core of the system, we see, well, this effort for fragmentation, right? And then let alone China. And then in the global south, we have national initiatives, but we have also concerted initiatives. I jumped to here from another webinar where we were discussing the BRICS efforts to reform the international monetary and financial system. And then I agree with Anne, they are still very timid, in my opinion, but there are efforts, right? The creation of the new development bank, and then there is the contingent reserve arrangements, which is a swap lines for the BRICS countries to share reserves, and then other initiatives which show that there is at least an effort of circumventing the dollar nationally and collectively. At the same time, the US is reacting, right? And Trump, I don't know if you saw it. Well, he's trying to push for dollarization through digital means as well. So the stable coins, 99% of the stable coins are backed by dollar, and they are trying hard through the Genius Act to dollarize through stable coins. But what I was going to say is that in a press conference related to the BRICS, by the way, Trump said that losing the dollar hegemony would be equivalent to lose a world war. So coming back to the world war, it shows to what extent he is ready, they are ready to react to efforts of de-dollarization in order to well, try to keep the dollar hegemony. So it's really a moment of an earthquake. We don't know. I don't see the end of dollar hegemony in the near future, but I see a lot of, well, chaos.
Before I hand over to you, Anne, one more question, going a step back, Bruno, also for the audience, that can you look at the last years of Brazilian history, the Bolsonaro and the Lula government, and how does financial subordination is concretized, and what are the implications of this for Brazil today? And what does dollar hegemony mean for a semi-peripheral country? I mean, Brazil is not one of the poorest countries of the world, but even then highly subordinated.
So
exactly.
what we're seeing actually, it's a reaction. You want me to respond?
No. First Bruno, and then I hand over to you.
Sorry.
Yeah. No. Yeah.
Yes, but I totally agree, Andreas. Even if you are a big country with a big economy, but we are very much subordinated. And one way of seeing it, and then we come back to the topic of this discussion, which is finance and democracy, right? When Dilma Rousseff she was elected for the second time, so she was re-elected. It was a very tough election, and then her program was it was more progressive than the other program, and it won the elections. But at the same time, there was a strong pressure for the credit rating agencies to downgrade the ratings, Brazilian ratings. And then Dilma, once elected, in the very first day of her new government, she decided to impose austerity. She changed the Minister of Finance, and he was a very neoliberal person, Joaquim Levy, and they started austerity policy in the very first day. Well, this was a moment of political chaos, because also she lost popularity. So people who had voted for her, well, they were against austerity. This was the moment in which the parliament organized a coup d'etat. And then she was impeached, and then the right wing came, and right after Bolsonaro, the far right wing. And in my opinion, it has several reasons, but it has a direct connection with this subordination, which led Dilma Rousseff to implement a policy which was, at the end of the day, imposed by the credit rating agencies and not by the people who had voted some weeks ago before in a kind of program, you know. So, and it led to a pseudo-Nazi government with Bolsonaro. So it shows the relations. No, the credit rating agencies, I can put it like that, are very anti-democratic because they impose. They are policymakers. They are policymakers, and so they impose policies which are not the ones to which the population voted. And then countries are just, well, afraid, governments are just afraid of not following it because there are sanctions, private sanctions, meaning capital flight, pressure on the exchange rate. So there is a tension also with credit rating agencies becoming protagonists in a world, becoming policymakers in a world where votes of the population, well, value less than their pressure.
And I think this is exactly the point for Anne to enter, and the UK example.
Well, I think this is where Polanyi enters the discussion, really. So, because Polanyi was so correct about we're living in a world where we have government by markets, not by governments. Our government, even in the North, are impotent in relation to those markets, as I tried to show in my opening remarks. And as a result, we have people demanding protection from those markets. Even in the United States, in the Rust Belt, people are saying, can you please protect me from these markets which are stripping me of my ability to earn a decent income, to put a roof over my head, to obtain health care, to send my children to have higher education. The markets are preventing me from having those things. I want protection from that. I want a strong man or woman to protect me. So they get President Trump. He comes along and he says, I will protect you. I will build a wall with Mexico. I'll build a wall with Canada. I will come to you. I will build a wall with China and I will protect you. Of course, he has no intention of doing that. But that impulse is the same across the world. We're seeing it everywhere. We're seeing the rise of right-wing populism, fascism, not just in the United States, not just in Europe. But for example, right now in Britain, our Prime Minister is an austerity Prime Minister. We have a Chancellor who is preaching austerity, and the markets want austerity, and the people are saying, no, I need to be able to afford a roof over my head. I need to be able to afford healthcare and food, and I need to be able to send my children to university. And please, can you find me someone strong that will defend those demands? And we're seeing this across the world. And it's a reaction to government by global markets. And so that's why we don't have democracy, is because governments have no power. Our government keeps saying, sorry, nothing to do with me, Gov. I'm sorry about the oil price, but I haven't got buffer stocks. I've been advised that we should not maintain buffer stocks of anything. And no, I'm not allowed to give subsidies. And no, there's not enough money for any fiscal tax breaks. No, you're just going to have to suffer those high prices. And the people are saying, no, we want to be protected from them. And they're turning to the far right, because the far right is telling lies and saying, yes, we will protect you. And that's what they did in the 1930s, as Polanyi so clearly explained. And that's what's so terrifying about this moment. I thought I'll stop there.
No, but is there any chance or perspective for leadership today, and in what would it consist?
So it's really difficult, Andreas, because if you look at our parliament, for example, our parliament has been hollowed out. There was a time in my youth where the parliament had political and economic power over the health service, over housing. There was public housing. They had some control over the housing market and so on and so on. They'd been stripped. The water companies, we had power over the supply of water. We've stripped away those powers and we've privatized them. So our water is now managed by private companies. Our housing is mismanaged by private companies. And the government has to sit there and say, sorry, but there's nothing I can do. It's nothing to do with me. And it's that powerlessness which is making people so angry and which is causing such a bad political reaction.
And there is, for both of you, and that relates to global finance and authoritarianism, a question. How do you see the rise of the international financial nodes, such as the Arabian Emirates, with an authoritarian leadership and poor democratic oversight, and its relation to the emergence and sustaining of authoritarian regimes across the world? So new financial centers and authoritarianism?
Are you asking Bruno that question? No?
Whoever wants to answer.
No, I mean, for me, it's obvious, the financial system wants to detach markets from any oversight or regulation by the state. And so that they have succeeded in doing. And by doing so, they have, made the state effectively impotent. And it's that reaction to that impotence which is leading to the need for an authoritarian, someone who will take control and restore, some power to the people. And that's the demand for strong leadership and for right-wing parties. It's a consequence of the determination of the financial system to detach markets from government regulation and oversight.
And perhaps, Bruno, you want to add on, or perhaps the Brazilian link of authoritarianism and crypto and fintech?
Yes, well, maybe you can start with the US, right? Because when we see this Genius Act that was signed by, the parliament in the US and was pushed by Trump, we see that, it's very much related to the lobby and more than that, the money, right? That Trump received during the election. He received a lot of money from those crypto asset managers. And also, there is the possibility now that the big tech, the giant techs will enter this market as well. So you can imagine, I don't know, Google or Facebook or whatever. They have billions of users in the world. They have the network, and then if they can create their own currencies or digital assets, then it's not so easy to avoid it, to regulate it. So there is this relation between the authoritarianism of Trump with those new players in the financial market. That is very clear.
Can I say?
Sure.
And can I say, Bruno, this is the fault of economics, in my view, of economists, because it arises from a misunderstanding or a non-understanding of money. That understanding that money is a commodity. Money is not a commodity, as Keynes very clearly and many other economists have argued. But crypto pretends that it's money when it's not. It's just some numbers on a computer pretending to be a commodity, pretending to be a coin. And for some reason, the key element of the crypto is that it is beyond the law, that it is lawless, that it can move across borders because it's not subject to any form of regulation. That's why it's absolutely fundamental to this whole financialization system. But it's being tolerated by central bankers and by regulators. They allowed crypto to grow to the extent that it has now. Now we have a corrupt American president, as you say, Bruno, who was bribed on the night of his inauguration, to validate crypto. They've now tried to put it through the rigor of regulation in the United States, but that's giving them the power to spread this currency around the world, and with it to spread corruption and lawlessness. So it's an extremely frightening situation. But I blame the economics profession for not being clear about the nature of money, and I blame the central bankers for allowing crypto to expand in the extent that it has. It is a criminal. It is a criminal currency. We must be very clear about that.
It is indeed, and it's being spread, especially in the global south. So we see countries like Nigeria, the stable coins already, and then it can create a very, very strong financial crisis, in my opinion, precisely because it's not money. It's not money. They are financial assets, and even stable coins, which are supposed to have a parity to the dollar, this parity can break whenever there is a crisis, right? So I totally agree, and I have a kind of a hypothesis. In the Susan Strange has a very interesting, claim that whenever we discuss power, we have to discuss the bilateral power, the relational power, right? The bilateral power between countries, and the structural power, which is detained by the hegemon. Only the hegemon can change the structures of the system to its own benefit. And in my opinion, what the US is making now is precisely that they are trying to change the structures of the system with the stable coins for their own benefit. So by spreading this, by doing these new policies of digital dollarization. Even I don't know if you saw at the Financial Times, but even in Gaza, they are trying to impose with this, what is the name, peace board. They are using the peace board in order to put a stable coin backed by dollar in Gaza. So not even over the corpses of thousands of people there. They are still trying to push for dollarization, even in Gaza. It's really terrible, terrible. And then if you wanna come, Andreas, to a good example you asked for, I don't have the solution. But in my opinion, there is a nice thing happening in Latin America now in Colombia. Because Petro, he's trying to face, to a certain extent, this financial power. It's not easy to do it. So when he said that he would impose capital control, then there was a big devaluation of the Colombian peso. So he had to give some steps back. But at least there is a struggle now between the central bank, which is independent, and the national government in order to debate what's the role or can be the role of the central bank for development, for ecology, it's interesting because it's a year of elections in Colombia, and Petro is being brave enough to push for these very tense discussions in an electoral year, and he's getting support from the population. So fighting the central bank, he's getting support from the population. Apparently, he will win the elections. Let's see. I mean, his party in the elections by facing the financial system to a certain extent.
Yeah.
But do central banks, for example, especially in Europe, aren't they afraid of private US-controlled crypto? Or are they so alienated that not even this is threatening them?
No, the ECB is afraid. At least what they say is that one of the main reasons for the creation of the digital euro is precisely to avoid the dissemination of US-backed stablecoins. In other parts of the world, in the UK, and can say better than me, but there is some hesitation in terms of the creation of the digital pound. In Europe, the ECB is pushing ahead. The parliament is blocking the whole thing. But the ECB is trying hard, and they claim that it's relevant to avoid stable coins.
So in Britain, we are totally committed to the Hayekian view that money is a commodity, is commodity based. And so, blind to the threat that crypto faces us. And, until we understand money better than we do here in Britain at the moment, we're not going to be able to tackle this. But yes, it's absolutely right that the ECB is pushing this very hard.
Thank you. We are coming to an end. We have a little more time. I have one more question, and the audience has the chance to put one or the other question in the Q&A session. But I have a question that's probably for both of you. How do imperial rents interact with contemporary debt imperialism, and what are the implications for semi and peripheral countries? I think an old issue for you, and you've been working on.
Imperial rents, are you talking about?
Yeah.
And what are the implications for peripheral countries?
Yes, that's the
Right,
question,
right
I
now,
think.
I mean,
Yeah.
partly as a result of this complete deregulation of the financial system, we have watched as, and I mean, there's a real problem for financiers because they need, above all else, they need collateral to back up their transactions and their lending. And there isn't enough collateral in the world, if you like. So in a sense, what creditors are doing is expanding the field of lending, and they have expanded it to include low-income countries. And low-income countries, if you like, have played the game. They're willing to borrow in international capital markets. I remember watching Ghana in 2011, 12 up to 2015, and Ghana issued a global bond to the global bond markets because they felt that would be a quick way to get money. And sure enough, because the creditors understood that ultimately that bond is backed by Ghana, and Ghana also may well be backed by the IMF ultimately, they happily lent money at very high real rates of interest, which Ghana could never hope to repay. But in the short term, she was able to get hard currency. Her elites were able to obtain hard currency and use that hard currency for their own purposes, very often for buying foreign properties and foreign trips and so on and so forth. So quite a lot of the money was wasted and not invested in at home. But the real burden becomes the repayment of this debt at what I call usurious rates of interest. Usury, the sin of usury, the very high real rates of interest that countries of the periphery are expected to pay. And ultimately, the debt becomes unpayable because, first of all, of the fluctuations of the dollar affects the value of their currencies. So when the dollar strengthens, for example, we have a COVID crisis, suddenly the dollar is, capital leaves all of these countries and flies to the dollar. This causes exchange rates to fall. That causes everything to be purchased in dollars, i.e. energy and pharmaceuticals, to be beyond their reach. And then they have the burden of repaying this debt in dollars. And it's just been obscene to watch, really. So there's been a process whereby that debt has been deliberately lent, and a process whereby countries in the South have often decided that they will accept credit and those very high rates of return. Now, ultimately, they will default. The question will be who will carry the burden of adjustment of that default, and you can be sure it's not going to be rich countries. It's going to be the poor countries. The IMF is going to move in and impose even more conditionalities and demand even more extraction of wealth from those countries, even more than they've already extracted at the moment of default. And that again is going to worsen international tensions. And I'd like to be optimistic at the end of this conversation, but these imbalances and these rates of extraction of the wealth of those who do not have wealth is really very destabilizing in terms of the global, both the financial system, but also in global political system.
Bruno?
Yes, again, I will agree completely with Anne. And actually, this differential of interest rates can be seen as an imperial rent, right? In these new calculations we are making, we get for the external assets that the US has in the world, it earns on average 4% per year. And it pays for its external liabilities 1.5%, 2%. And for the peripheral countries, For the external assets, we earn more or less the same, 4, so it's fine enough. But then for the liabilities, we pay 8 or 7 or even more. The basic interest rates in Brazil are 13, 14%. So this is a rent. And it does not have anything to do with political chaos or anything. It's related to the constitution of the international monetary and financial system. That's what we try with the International Division of Finance to discuss it as the periphery is functional to the center. It's not a dysfunctionality of the system, this differential. It's the opposite. It's built like that. So, well, we can, in my opinion, we can name it as an imperial rent. And again, as Anne was saying, in I don't know, dozens of countries in Africa, they spend more with the service of the external debt than with education and health altogether. So this is a capture of wealth, which has very relevant consequences for the society, for the ecological transition, for the growth forward.
On average, low-income countries are spending 45% of their budget income on debt service repayments, both domestic and international.
Yeah.
Some countries it's up as high as 90% of budget revenues. So it's extraction at a level of an obscene level of extraction, really.
Yeah, and it's also very detrimental to climate politics. There are people arguing that austerity is worse than growth, because it cuts public investment, especially in the global south. But to end, I have our question once more, and as I perceive that we touched less on fascism than on global finance, also implicitly that was strongly related. But I will give both of you the chance for closing, trying to answer global finance and fascism yesterday and today. What are the learnings? What are potential takeaways?
Bruno, do you want to go first?
Yes, maybe, well, to finish on a positive note, as Anne said, well, the reaction to this deep crisis, I think we are living a humanitarian crisis, right? If you take into consideration finance, ecology, we are living a humanitarian crisis. And then one possible reaction is the national reaction, which is, well, a terrible reaction, in my opinion. I agree, and because then it can lead to fascism. And then the reaction I would love to see is cooperation, right? So regional cooperation in Latin America, but also Europe can play a very important role in this context because, well, Europe is a bit squeezed between China and the US. And this would be the moment we were discussing with Andreas before for Europe to be connected to the global south in terms of creating more cooperation, also in things related to finance, right? Why not thinking again on a supranational currency? And then if not, why not thinking on, well, new ways of circumventing the dollar? Why not thinking on how to bring the international monetary system? And this cannot be done. We didn't have time for that, but the dollar hegemony also pushes for more extractivism in the periphery. So we have to also think in how to bring the international monetary system. And it cannot be done on a national basis. It has to be done with international cooperation.
I mean, I just want to repeat the Polanyian insight, which is that government by markets leads to a public reaction, leads to public protectionism and defensivism, and it leads to the need to have strong men or women. In the case of France, it may be Mrs. Le Pen. In Italy, it's Mrs. Meloni. In Hungary, it was he's forgotten his name, he's already been defeated, but nevertheless, wherever you look, there's this demand for protection, and it's a demand for protection from financial capital markets. And until we understand that, we're not going to be able to do anything with it. We're going to be, thrashing around at a domestic level, thinking, what do we do here to make people feel more stable and confident? And it's not going to work, because so long as we live by government by markets and not by government by a democratic government, then so long will people turn to fascism as a form of protection against these markets.
Thank you very much. Thank you, both of you, Bruno and Anne. And I think, if I may add one thought, I think looking back at history really is a source of hope. Yeah, we heard that there were other options than austerity taken in the 1930s. There was the defeat of fascism, and there was the defeat of economic liberalism for at least some decades. So a new great transformation, as Anne kind of implicitly argued, might be possible. Also, it looks difficult, lack of leadership, lack of social movement of left parties, but history has surprises in both directions. Yeah? And I think we have one more slide, Jana, for ending this session. This is one of the activities of the International Karl Polanyi Society. Our next one will be a public lecture physically taking place in Vienna, but there will be a live stream by our Vienna Karl Polanyi visiting professor Isabella Weber. It will be on inflation in times of overlapping emergencies. And if you don't know Isabella Weber, she is publishing a book that will come out in a few months on anti-fascist economics. And what she understands as anti-fascist economics is very strongly the arguments that you just heard from Anne and Bruno. And what is also kind of important to know, Isabella Weber agrees with Anne and Bruno that understanding money and changing monetary politics is crucial if we want to deal with the emergencies of today. So if you have time, join us with the live stream. There will be a video afterwards, but join with the live stream. And until then, all the best, and we hope to see you soon again. Yeah.
Right.
Bye-bye.
Thank you very much. Bye-bye.
Thank you.
Thank you, both of you.